Alrighty. Good morning, good morning, good morning. How's it going, guys? Bitcoin pumping. I'm going to be struggling today to keep up with Bitcoin's energy. Just FYI, FYI. How y'all doing? How y'all doing? Let's go ahead and find the chat. Give me a A-OK if you guys can hear me A-OK. Oh, I actually don't see the chat. Oh, hey, there we go. How's it going, Julian? Nick, how's it going, man? And Hillary, how are ya? Cool, I gotta run, go pick up the kids from school. Oh, that's sweet of you. Okay, cool. Hopefully you'll be back. Unlikely though. Randy, how's it going, man? How's it going? Bitcoin pumping, banks dumping. I know, right? Like, I was messaging one of my whale buddies, and I was like, "Hey, man, we can't be ignoring these signals. Canary in the coal mine right here." Alina, hola, and Pop's here too. Smash the like, guys. Smash the like button. Okay, so today we're not going to be looking at the lower time frames, although Bitcoin is pumping, and that would be the smart thing for me to do if I want to draw attention to the channel, etc., etc. But I do want to realign all of us with the longer term goals, etc., etc., right? Because people tend to do this. Again, people tend to do this. They get excited at resistance. They get scared at support. We don't do that over here at Mango. How's it going, Marino, Mitzi? I'm not as organized as usual, guys. So actually, let me just go ahead and set a few things up first. Mostly I don't have any of the Cardano charts up. Okay, I have this over here. There's a lot to talk about today. Okay, I suggest you guys use this time to go get some refreshments, some drinks. Because yeah, there's a lot to talk about today. Just on Bitcoin, there's a lot to talk about. So I'll put this here. Ada, is it Ada or Ada? Okay. I'll duplicate this tab as well. I'll put that there. Ada. Got the Ada thingy over here as well. Dashboard. Okay. And perhaps if you guys could leave a the altcoin you guys want to cover tomorrow, let us know in the comments, and we'll do that. But yeah, so take the time again now to leave a comment in regard to what altcoin you guys want us to cover tomorrow. Because today we're doing Cardano. Okay, guys, we're doing Bitcoin and Cardano. I'm not going to have the energy or the time for anything else. Okay, so Cardano. And you can check CMEs as well. Ooh, interesting, interesting. Okay, cool. Yeah, I actually, yeah, this is interesting. Okay, let's start with this. Okay, cool. Let's go to this screen. You guys should probably be able to see me. Oops, why are there two tabs here? That's wrong. Okay, whatever. Doesn't matter. Doesn't matter. You guys can see me A-okay. You guys can hear me A-okay, right? I'll put this over here. I'll put that over there so I can see the chat. Smash the like. Alrighty. As you guys can see, we have the target rate probabilities up. And honestly, this is all you guys need to be watching to understand what's going on with the markets and how to position yourself, because that's the narrative right now. What's the Fed gonna do? What's the Fed gonna do? Etc. Right? If you want to position, you can watch this. No, don't watch this for your long-term positioning, because you will get wrecked. Okay, you will get wrecked. But there's opportunity over here, right? We can go ahead and talk about this, but you guys can see what I'm looking at, right? Just let me know in the chat if you guys are looking at the same thing as I am. I'm showing the target rate probabilities right now. So I'm going to start off with explaining what this is exactly for those of you who don't understand. Okay, I'll also put a link down in the description and the chat. And if you guys do want a segment once a week where I cover just like, top-down macro things that I look at to keep an eye on what is going on in the macro, and me explaining it to you guys in a very simple way, if I get enough people asking for that in the comment section, I will go ahead and do that. I'll be happy to cover that too, because it is where a lot of my interests lie at the moment. How's it going, Shervin? Okay, so what we're looking at the moment is the target rate probabilities for the meeting coming up 3rd of May, 2023. As you guys can see, if you scroll up over here, it is 7 days away. Okay, 7 days and 5 hours away. Okay, so essentially what this is showing you is what the market thinks the probability is as to whether the Fed is going to raise or not do anything at all, right? Basically stay flat, right? And how do you read that? How can you tell that from just this information? Okay, I want you guys to first look at, I should zoom in, right? Yes, please cover macros, Alina. Let's go ahead and zoom. Okay, is this better? This is probably better, right? I want you guys to look at the top over here where it says current target rate 475 to 500. What that means, guys, is that the current Fed funds rate, okay, the rate that the Fed sets for banks to borrow from them is at 4.75 to 5%, okay? That's a simple way to understand it. As we get deeper into macro, I'll start complicating things for you guys. But for now, just look at this as the short-term lending rate, the overnight lending rate that the Fed is willing to lend banks, to banks is at 4.75 to 5%. Okay, so just add a decimal after the first number, 4.75 to 5%. Now, the market is saying that there's a 24% chance. You're looking right over here. 24% chance that the Fed will change the rates to 475 to 500. But hey, that matches the current target rate, right? So what that's telling you is that the markets think that the Fed is not going to do anything. Okay, that there's a 24% chance that the Fed doesn't do anything at all. Okay, it's the same number, right? It's the same range. Target range is the same, which means that the market thinks 24% chance that the Fed does nothing at all. That's how you can decipher whether it's a 25 basis points hike or a 500 basis points hike. How do you decipher that? Look at this example right over here, okay? 76% of the market thinks that the Fed will change the target rate to 500 to 525. Okay, now you can just do the math, right? 500 minus 475, that's 25. So the difference between this target range to this target range is a 25 basis points hike, right? So for example, if this said instead 550 to 575, that difference would be sorry, if this said 525 to 550, the difference would be 50 basis points hike, right? If it said 575 to 550, it would have meant 100 basis points hike. Simple math, which I just messed up twice, by the way, if you guys caught that. But yeah. Okay, so what's interesting about this over here, guys? What's so interesting about this? If you guys do remember, in the last stream, this was sitting at around 88%, right? 88%. So at that point, the market was saying that there was an 88% chance that the Fed increases rates by 25 basis points. And I had said to you guys that, hey, this is actually bullish. Why was it bullish? It's because all the bad news of hawkish news of the Fed increasing rates was already priced in. The market is already expecting it, right? And I always teach you guys this, is what matters is what the market is not expecting. That's what moves prices. Because as soon as the market expects something, a certain news event, a certain big crisis, it's being priced in. No one is sitting on their couch thinking, yeah, the markets are going to crash today. We're okay. No. If people believe the markets are going to crash, they are going to take action, right? They're going to price that in by making certain moves, either selling, buying puts, etc., etc. So when you see the market's expectations of something, it's telling you what the market has already done, right? So what that told me was that, hey, if the market starts changing the expectations the other way now, there's a lot of room for that to happen. And that's exactly what has happened, right? This has gone up to 76. This has gone down to 76%, and this has gone up. How can you tell that? Well, you can just look at this over here down. If you scroll down to this table over here, it tells you. I can't scroll for some reason, but I think you guys can see it. It tells you 1 day ago, or rather 1 week ago, we were looking at 83%, and for a 25 basis points hike, and a 16% for a 0 basis points hike, right, for no change. Now that has increased to 24%, and the markets are kind of reflecting that, kinda, with Bitcoin rallying. We know that First Republic is seeing some stress as well, etc., etc. So yeah, I did want to talk about this before we get on with the rest of the stream. So keep an eye on this, guys. If you guys have any questions and you guys want me to cover this more often, let me know in the comments down below. If you guys don't, and you guys don't care about any of this, you guys just want Bitcoin and Cardano, let me know. Either way, just let me know and I'll cover things accordingly, because it is time and energy, right? So let's go ahead and get started with the dashboard right over here. Okay. Now, we're going to take a step back. Today, there is a lot to cover. So I'm going to go ahead and take a sip of my drink. We've been monitoring the volatility and the trend on the dashboard over here. And things weren't looking too good on the 12-hour, the daily. The shorter to mid time frames just weren't looking good, right? And we said that, okay, that's fine. That's fine. The daily was long for 30 days. And I wasn't feeling too good about it. If you guys do remember, Bitcoin's moved to around $30,000. I was long-term bullish, but I wasn't bullish at that zone, right? I wasn't feeling too. My trader instinct was telling me, Sean, control your emotions because you will get wrecked if you try to get excited over here. Okay. We were more eager at lower prices if price were to come down there, or if price were to flip that level. But if we looked at the daily, we were long for around 35 days, right, at the time. And I didn't like that, right? I didn't like that. 35 days is a bit too long. Things need to reset for the weekly to come back into equilibrium, okay? So what was the plan? Or rather, what were we hoping for? We were hoping for these trends on the daily, 12-hour, etc. to reset. And how can you see a reset over there? Either by them switching to neutral, or by them switching to short and then back into long, right? So we got that. The 12-hour flipped to short, I believe, as well. Yeah, it flipped to short. It just flipped back to neutral, by the way. The daily flipped to short. Previous trend was long. So that was an aggressive switch. And now we're waiting for this to flip back into neutral. What we were hoping for was for the weekly to hold the trend up. Because remember, the dailies, the 12-hour, the 2-day, etc. can all flip. As long as the 4-day and the weekly are still looking good, we are good. Okay, we want the 40 and the weekly to look good. Okay, you guys only need to focus on the 40. I like to look at the 40 a lot. You guys want to keep your lives mango, just look at the weekly. The weekly's still long, still holding strong, and we're going to be looking at that to stay in line with the trend. So we're like, okay, cool. Things have flipped short. Cool. We hit $30,000 resistance. We're on our way down. Maybe we get that move down to that key level that I would love to be a buyer at. And that was 24,000, right? We were looking for a dip into the middle of this FEG zone right over here, but we're looking at the Mango view now, guys. Available at app.mangoresearch.co. Check it out. There is a trial that you guys could play around with for free. And there's a way to get a free month as well if you use the, what's it called? There's a referral program. Yeah. So anyway, check it out if you guys want to. Yeah, we were looking for this to dip down into the middle of the FEG to get that perfect buy, the easy buy, the mango buy, right? And then we were looking, and why the middle of the FEG? There was a lot of confluence there, horizontal support right over there, as well as the 21 EMA coming in right over there, lining up at around 24,500. So if we got that, I was going to bid that. I was ready. I had my capital ready too, right? So what was the plan? The plan was to see price come down there, touch the 21 EMA, and then close above this zone over here, the FEG, as well as this white moving average, right? If you guys click right over here on your 10 SMA and your 200 moving average on the right-hand side right over here, guys, you can turn that off and on. So we saw a lot of confluence over there. 10 SMA, top of the FEG. We wanted that to get defended, but we also wanted the greedy bid by price first coming down to the 21 EMA and then bouncing back up and closing the week, because we had enough time. It's only Wednesday, for God's sake, right? So price could have very well done that. But even First Republic going down wasn't enough to put Bitcoin down over there. So unfortunately, I wasn't able to add to my position, but I'm happy. I'm happy with my bid. We've been bidding Bitcoin through this entire zone over here, bid Bitcoin over here, bid Bitcoin over here. We're happy with our position. So when I have a good position, I've learned the hard way is to not mess it up by buying into higher prices by being greedy, right? Wait for the greedy bid. Once you get a good bid, wait for the greedier bid, because that's crypto for you. Crypto will give you the 30% drawdowns. Crypto will give you the 15% drawdowns. Wait for them. They will come, especially if you have a good position. The risk is when you don't have a good position, when you're not in position and you're trying to get a position. At that point, maybe you should have been looking to scale in over here, but most of us should have already been in position. And honestly, I'm not too keen considering that the time to have been getting in was like a month ago on Bitcoin. The trade, in my opinion, has been on all coins. Cardano has been a very easy trade to manage, which is why we've been talking about it. And we will be talking about Cardano, giving you guys an update on it very, very soon. Just stay with me. There's a lot to talk about in regards to Bitcoin. So yeah, Bitcoin bouncing on the support over here, coming in around 26,800-ish. And we do have resistance overhead. So again, a lot of work for Bitcoin to do. Let's not get too excited. It is tempting to get excited, yes. But hey, I want to see this. I want to see this clear, guys. I want to see this clear. I'm just as excited as all of you. Believe me. We gotta stay emotionally in control over here, not do anything stupid, okay? Look elsewhere for trades. As soon as Bitcoin started doing something like this, started bouncing hard, you should have been looking at your altcoins to add. That was your clue, because altcoins didn't move yet. Altcoins gave us at least 1 to 2 hours to add to our positions, and then they moved, okay? So we're going to go chart by chart. I'm going to go ahead and give you guys a quick overview of our targets for Bitcoin all the way since we talked about these targets. We've been talking about these targets since November. You guys should be familiar, but either way, let's do a review. Cascading pattern. We had the falling channel with the ascending triangle underneath, cascaded into each other. Measured move was target 1, 24,600, lined up with a bunch of shit, 200 moving average, 200 EMA, blah, 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 blah. We're not going to go through it all. Target 1.5. We're going to be giving you guys a detailed review as to where this came from. Was around $31,000, $32,000. Just a quick idea. This was a dynamic Kijun play, right? It was started at around 42, has come down to around $31,000. Target 3 is still around $42,000. We'll be talking about why today. We'll be going through a detailed overview as to why $42,000. Is there another chart I want to talk about before then? Nope. This is essentially just our cascading pattern. All right, let's go. You guys ready for this? You guys ready to talk about our equilibrium play, which Julian coincidentally also alluded to in the Discord chat. If you guys aren't in the Discord, make sure you guys join. Available at themangoway.com/Discord. We do tend to make the channel inaccessible during bull markets, before the bull markets. So join while you guys can. Be active, because we do kick out people who are not active too. By the way, I will be also removing more people from the. If you're not active in seed, we will be trimming that down as well. So try to be active in there as well, guys. Just FYI, guys, the seed private chat is not a definitive it's not definitely included with your seed program, right? We don't just allow anyone into the seed chat. So if you guys are buying the seed program for access to the seed chat, please PM me first. Please PM Krisha first. We'd like to talk to you, get to know you, and then invite you into the channel, especially moving forward now. As we start going into a bull market, we do want to filter out the kind of people that we allow into the program. Okay, so let's go ahead and get started with this. Now, what we're looking at over here, guys, is BLX, which is Bitcoin's entire price history. So the chart over here is not updated. As you guys can see, Bitcoin is still sitting at around $28,000. This will update tomorrow, right? This is an index. So we had a thesis all the way back in November that Bitcoin was getting increasingly. If you guys remember, in the seed program, I gave you guys a Excel sheet where I had done a calculation of the disequilibrium between Bitcoin's price, the Tenkin, the cloud, right? I'd done it manually. I went through all of the moves, right? And that added to my confidence to say that Bitcoin is massively out of equilibrium. And at the very least, we have an equilibrium play on our hands over here, okay? We weren't calling any fundamental call on XYZ happening, etc. No, this was a pure TA call. TA dictates everything. And we had validations along the way, which was a cascading play, a 4-day dynamic, the Tenkin, remember? The major final activation was a weekly close above the Tenkin. So we had 2 entries before that, and the 3rd entry was above the Tenkin. So what is this play? It's essentially us saying that price is going to come back into equilibrium with all of the cloud levels. And the cloud levels is a compilation of the Tenkin, the Kijun, the cloud. Okay, and the cloud consists of 2 levels, the upper cloud and the lower cloud. And we were looking for price to snap back to the top of the cloud eventually. But on the way, we had targets, right? We had target 1, target 1.5, and target 3. Target 2. Target 1, target 1.5, target 2. Yeah, that makes sense. Okay, so where did we get this from? We're going to go through this one by one. What I'm going to first do is hide the horizontals, and I'm also going to turn off the moving average. Oops, that's the wrong one. Okay, out there. Now, historically, you will see that each time Bitcoin has a massive bear market, right? Massive bear market. As soon as we do claim the Tenkin, price tends to snap to the top of the red cloud, or let's just say the top of the cloud for now, okay? A little bit of Ichimoku theory, guys. The cloud is displaced by 30 days. Essentially, what does that mean? It means that, let's say you're looking at the cloud over here. It means that 30 days forward, you'll be able to see the cloud already drawn, okay? So if you go to our cloud at the moment, you can see that even though price is sitting over here, 30 days forward, the cloud is already drawn. So we can look at the cloud forward in time, and we can look at the color of the cloud. Okay, that's important to note. The cloud is red at the moment. Now, over here, what we were just simply looking at is, hey, price snapping to the top of the cloud. Okay, claim the Tenkin, meets the Kijun, equilibrium. The Kijun comes down to the Tenkin. Okay, so remember, claim the Tenkin, price consolidates and drifts up. One of 2 things happen. Price goes up to the Kijun, or we see the Kijun drift down to the Tenkin. Either way, price claims the Kijun, and then we move to the top of the cloud. Okay? That was our 2017 bear market cycle. Let's go to the 2013 bear market cycle. Claim the Tenkin, price this time around wasn't as aggressive, but we did go to the top of the cloud. Okay, just keep the story at the back of your mind. Claim the Tenkin, pull back over here, yes, but we did get our Kijun coming down to the Tenkin. Price drift, eventually makes its way to the top of the cloud. In fact, even though there's not enough price history for the previous cycles for the cloud to be drawn, you'll see something very, very similar where we claim the Tenkin and then we make our way for a bull run, right? Now, there are other confluencing factors with this as well. For now, we've kept it very simple. Claim the Tenkin, make it to the top of the cloud, okay? Now, what we're going to go ahead and do is we're going to turn off our Ichimoku, and I'm going to go ahead and turn on my fibs. Right over here. Trying to look over my mic. Oh, oops. Cool. Okay. So another thing that I've noticed is that every time price has had its bear market or Bitcoin has had its long bear market, we tend to make our way, or rather Bitcoin tends to rally to the 65% retracement level to 75% retracement level. If you want to be a little bit more precise, 618 to 786, right? But let's just say 65% to 75%. Okay, let's be human beings over here and not too mathematical. Okay. Similarly, so this happened 2019, 2017 happened right over here too. In the 2013 bull market run, we had a massive bear market and price rallied to the 786 to 618 level, which is our 65% to 75% retracement level. And interestingly enough, we did over here too, even though it may not look like it. What we did was we had our bear market, our bull market, our bear market rallied to the 618 level, got rejected on first go, put an ascending triangle at it, broke above to the 786 level, and that ended up being the candle close of the bull market on the weekly. When we cleared it, we had the next big up thrust. Okay, now we're going to turn back on our Ichimoku. Okay, and we are going to notice that these zones are marked out for you guys. Okay, we're going to start with the 2017 bull market. These zones I marked out for you guys, the Fib zones, is lining up with the top of the cloud. Each up thrust was the top of the cloud. Over here as well. And over here, again, even though there was not enough price history, you can see that the cloud did have a green element to it, right? But I wouldn't count this one, okay? To be fair, I wouldn't count this one because there's not enough price history to look at the Ichimoku over here. But technically, you'll say that it does work, right? Cloud green. So what's the thing that we're looking for? So far, top of the cloud, Fib levels. Top of the cloud and Fib levels. But there's one more factor that I do want us to take into consideration, okay? And to understand the importance of this factor, we need to look at what happened in 2019's bull run. The 2019 bull run, yes, we did move to the top of the cloud, but we also had a long bear, I wouldn't say long, but an aggressive pullback that could have hurt unless you are managing against it, right? So how do we manage against that? How do we detect it, right? Look at this zone over here. We pulled up to it, right? Top of the cloud, but let's go ahead and look at the color of the cloud at the time of the snap up, at the time of the equilibrium. And if we look at, put a cursor at the top over here, right, when price made its way to around 13,000, and we forward price 30 days, you're going to see that the cloud was still red. However, if we do that over here, when price made its way to the top of the cloud, you will see that the cloud had actually just turned green. By a couple of weeks, we had confirmation of the cloud turning green. So remember, the cloud is forward priced, right? It's forward drawn. It's placed forward. So the cloud was green over here for the 2016 to 2017 bull market when we made our way to the top of the cloud. Over here, the cloud was red. And Ichimoku theory is, hey, the trend is not fully activated until you have your green cloud. If it's a red cloud, you're still in a bearish trend. So yes, you may have your equilibrium play, but it doesn't mean that you have your trending move on your higher time frames, right? And that's what we were looking for. So our thesis on our equilibrium play was, hey, the faster price goes up, the more likely we are to be selling on our zone over here at the top of the cloud, and which is our, oh, by the way, I should preface with, if you look at this cycle, the top of the zone and our cloud, right, rather top of the cloud, as well as our Fibonacci zone is coming in around $42,000 to $50,000, right? So I've gone ahead and done the same thing over here. I've done our Fib retracement. I can go ahead and do it again for you guys just to show you how to do it, right? From top of the cycle to the bottom of the cycle, assuming this is the bottom of the cycle, it's coming up to around $50,000 is our 786 retracement level, and our 618 level is coming at around $42,000, right? So again, keep it simple for you guys. Say 60% retracement to 75% retracement, all right? Retracing that much of the cycle. And it's lining up with the top of the cloud too. What do you know? Confluence yet again, okay? So we had marked that out all the way back in November, okay? Talked about it through December, reiterated it in Jan, and we said that's what we are playing for. But we will not get too bullish until the cloud turns green. Is the cloud green, guys? Let me know. Is the cloud green? I want you guys to let me know in the chat while I take a sip of my drink. Exactly, the cloud is red. So as bullish as we want to be, it's too early to be looking for all-time highs. And you know what, we make it an all-time high, but even then you have to be careful because we may snap back down to equilibrium to the red cloud. I will not look for a parabolic move. That's my statement. I will not look for a parabolic move until the cloud turns green, okay? Now, that's why I had said that the faster price moves towards the $50,000 zone, $40,000 zone, the more bearish I will be at that zone. The longer we take, right? The longer we take, the more bullish I will be going towards that area. Why? Because it gives all of these levels, the Tenkin, the Kijun, and the cloud, time to come into equilibrium, to flip into green. Right? And that's not a bad thing. I know we all want things fast, 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 fast. Now. But hey, that's not the mango way. Okay? Believe me, from my experience, I wanted the same thing. Fast, 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 fast. I wanted price at this zone. Remember over here, right? When we were looking at a move to, I was calling for a move to 13,000, 14,000. But when we got there and it was all coming to an end, I was like, no, come on, just push it to 30,000. But in hindsight, I'm so glad that we took our time because I was able to accumulate that much more via altcoin trades during this entire Bitcoin consolidation zone. Similarly over here, if price does start rejecting, it's no reason to get depressed and sad. It's reason to start trading the altcoins and collecting more of your favorite coin, whether that be Bitcoin, Cardano, Ethereum, whatever, right? So we trade what is given to us. We don't get emotional. Don't look for the market to give you what it doesn't want to give you. Look to take from the market what it is giving you, okay? And right now, it's not giving us the green cloud yet, right? So we'll take from it what it wants to give us. And hey, Kijun resistance right over here. I do want to mention again that at the time when we had drawn this, the Kijun was over here. It's a dynamic resistance level, guys, okay? So because it's dynamic, we were watching it, and now it's coming in right over there at the 0.5% retracement level, lining up perfectly at $32,000. That's why that's resistance. That's why I'm not too keen over here. We were keen over here, while everyone was bearish. Now, again, when we came down over here, people are getting too bearish, but the 0.382% retracement level was probably opportunity, lined up with the FEG, lined up with the 10 SMA on the weekly, etc., etc. But again, we're already in position. No reason to get greedy. I'm looking for these reasons to flip. I'm looking for the Tenkin to cross bullish. I'm looking for a move like this. I'm looking for a move like that, perhaps. A retest of the Tenkin Kijun TK bullish cross. Remember, the blue line over the red line, Tenkin blue, Kijun red. Blue line over the red line is bullish. We don't even have that yet. Okay? We don't even have that yet. Let's look over here, guys. Let's look over here. When did Bitcoin have its bull run? When did Bitcoin have its bull run? Most recently, on the most recent run. Okay, Bitcoin made its way to the top of the cloud, just like we are looking for, right? Second move to the top of the cloud, let's forward price the cloud. Remember, 30 days in advance. So we're going to go 30 bars. Sorry, not 30 days, 30 bars. So we're looking at the weekly, so 30 weekly bars. Okay, 30 bars, cloud was here. Cloud was drawn here. Cloud was already green. Maybe the market is looking at the cloud, guys. Who knows? Boom, parabolic run. Okay, let's go back and look at this over here too. Made our way to the top of the cloud. We're going to go 30 bars ahead, right over there. Okay, take our pen, draw, and we're going down. Cloud was green. What happened? What happened? Bitcoin went from around, let's say, 600 to 800 all the way to $20,000. Okay, so we're just be patient. Be patient. Plate mango. Keep your head straight. Keep your head straight. Okay? There's going to be a lot of emotion during this period, and this is what's going to set you apart from everyone else who's going to be chasing price at much higher numbers. Okay? Same story happened over here, guys. All right, so that's our equilibrium play. I think I covered everything. There's way more to this that we've been talking about for months, right? There's the Dixie double cross, etc., that we need to go over. I'm going to go over all of that with you guys very, very soon. Now, we're closing a monthly soon too, guys. I do want to talk about our bullish resistance. The monthly 21 EMA being bullish resistance. Why do I call it bullish resistance? It's because every time Bitcoin has come up towards the monthly 21 EMA, right, we've stopped at it or closed ever so slightly above it and then made our way for a big move. Right over here too, stopped at it, closed ever so slightly above it, made a big move. Over here too, COVID as well. Even the COVID freaking move was not enough for the bullish resistance. We came up to it. In fact, this time we closed well above it. And had a big move. So every time Bitcoin comes up towards the 21 EMA, every other market will treat it as proper resistance. For Bitcoin, it's bullish resistance. That's how I like to look at it. It's because trading, if you trade it like you would trade any other market, you'd be getting wrecked. And again, it seemed to be the case because came up to it, closed ever so slightly above it, retested it, and do we make a big move towards the upside? Who knows? Who knows? But I don't look at it as a bullish level, so to speak. I like to look at the trend. We're looking for equilibrium. I'd much like for the 10 SMA to come and cross above, and then 21 EMA go something like this. We maybe get a move like that, and then down over here, right? That would be a nice retest. That would line up with our weekly Ichimoku Equilibrium play as well, and then a move towards the upside would be very, very nice. Okay, so yeah, that's a long-term play on Bitcoin on the weekly and the monthly. Monthly is looking fantastic. Just last night, I was having a discussion with Kusha, and I was saying, Kusha, you know what? We don't need price to price could come down to 24.6K. Maybe I wanted it to come down to 24.6K because, I wanted to get filled. So I had my biases over there. And she made a good point. She's like, no, the monthly is not going to look good, Sean, if we don't defend it, right? And I went and looked at the candle. This is where your candlestick analysis, guys, is so important. And I'm like, you know what, you're right. The bulls need to defend the look of the candle at the very least. And that's what they're doing. That's what they're doing. Now remember, defending the look, and this is what I said to her. I'm like, okay, they need to defend the look of the candle, but we don't need to see continuation after that. We really don't need to see it after that. So be careful. Just because we get a good candle close in the monthly, I would be fine with some consolidation over here. I would like it, in fact. I want to see the 10 SMA cross above it. Okay, so keep that in mind. Good candle, yes. I would like to see the bulls defend the look of this candle, but do we need to see continuation right after? We don't need to. Would it be nice? Yeah, sure. But I do know the faster we get to 50,000, the faster a lot of people will be selling, right? Just keep that in mind too. Okay. Cardano now. Any questions before we move on, guys? Okay, all clear. We can just look at Bitcoin on the lower time frames quickly before, just to give you guys your shot of dopamine. That's what Bitcoin did when a bank fails, apparently. Bitcoin, okay, so bank failed over here, Bitcoin did this. Bank fails over here, Bitcoin does this. What world are we moving into? What world are we moving into? All right, Cardano. We'll start with the Mango dashboard. Should we do Mango View first? Yeah, let's do Mango View. This is the daily. So 4 hour long, flip long, 9 hours ago, wall pretty high. Cardano likely had a nice move, sitting at 41 cents. 12 hour just flip neutral. Wall pretty nice though. Eh? If you guys have been watching this, this was opportunity. Daily still short, but again, weekly long, 4-day long, right? What's our trade? What's our trade? Yeah, let's move on to our trade, and then we'll come back to the dashboard. Our trade has been, so we had 2 trades. One was on the 4-day, which was the later trade, in case you missed the first trade, right? The trade where I literally freaking emailed you guys. Kusha and I sent you guys an email saying, hey, the freaking trigger went off. We waited months for this. It's finally gone off. We opened above. We closed above. Because Cardano had its move. Then we came down to the dynamic right over here. Let's zoom in. Perfect test. Bounced off it, and we're seeing continuation, right? So I was going to take my loss if we close underneath. In fact, when we came down over here, that trade where I was looking for Bitcoin, looking to add to my Bitcoin trade. So let's I don't want to make it out to seem, guys, that I'm winning on every single trade, because that's not true. I took a loss on my 12-hour Bitcoin trade, right? I took a trade on Bitcoin on the 12-hour dynamic. I didn't have a lot of conviction on the trade because we weren't sitting at good prices, but because it was a 12-hour trade, I was able to get in and get out fast, right? I knew I'd be wrong very soon. Took a loss over there. Now, because I took a loss, this is why it's so important to learn how to take your losses, guys. Because you take your loss, I freed up capital. I had open capital left to deploy, and now I'm hungry, waiting for Bitcoin to come down to 24.6. Bitcoin didn't want to, though. Bitcoin didn't want to. Cardano, sitting at a good level, came down over here. I have this capital that I can redeploy. Now, what was better, guys? What was better for me to have sat stubbornly in my Bitcoin trade and stress, taking the sign of the cross, please God, please God, please God, please God, pump, 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 wasting my day, wasting my hours, stressing over price when I could be going to the gym, spending time with the family, reading, learning, studying, having that capital on hand to deploy at a better price on Bitcoin or perhaps on Cardano. Deployed on Cardano over here. The plan was to deploy on Bitcoin. Didn't get the chance to. Cardano is looking good. I was scaling into it and deployed onto another altcoin that you guys in Seed probably know which one that I've been looking at, because I've been freaking talking about it a lot. So Cardano looking good. Our weekly trade is still intact. Mango dashboard right over here. You're seeing confluence with Mock's bearish FVG. Just go ahead and turn off your FVG. Turn on your FVG right over here. Do we have any other confluence over here? Let's go ahead and turn on 21 EMA. We have the 21 EMA right over there too. So Mango dynamic, 21 EMA, FVG, all coming in over there. And dashboard trend is still long as well, right? So keep an eye on this long trend. 4-day trend is still long as well. So Cardano is still looking good as well. Let's go ahead and talk about Cardano on the 4-day pattern trade though that got invalidated. You guys can see that I still have my measured move in place over there, okay? So we did have a pattern trade that we are looking at on this neckline. Now, again, we did talk about how you could have stayed in your trade if you were looking at, something like this. But again, how do you know how to draw this? What if you draw it like this? Krisha's the pattern expert. I'm not. I like using horizontals because I like being objective. I like to know when I'm wrong. And you guys now know why it's so important to be a champion loser. Because you free up capital, guys. You free up mind space, right? I lose all the goddamn time, and all I need to catch is one strong monster trade, and it makes my year. Yeah, makes my year. I don't know which trade is going to be the winner, by the way. I don't. The other day, I got into, so it's been a couple months now, actually, gone to a trade where I had no idea this was going to be a strong winner. I just picked it based on the trend. And 10x'd. It freaking 10x'd. Okay, I didn't know it was going to do that. And there were other trades that I thought would do really well, and they don't, right? You don't know which one's going to do well. But if you free up capital and pick trade after trade after trade after trade based on your rules, you'll just catch a winner. That's crypto for you. That's why we're trading crypto. If you're not looking for those huge wins, don't trade crypto. Don't trade crypto. Yeah, if you're not looking for the big wins, don't trade crypto. There's no point, in my opinion. Okay, so that's pretty much it, guys. If you guys enjoyed this video, don't forget to smash the like. We covered, is there anything else I do want to cover? Oh yeah, the pattern trade. The pattern trade on Cardano, it's still intact in my opinion, especially if we do, the measured move is still intact, right? If we do see continuation of the trend. Just wanted to point that out. The trade is invalidated, but the measured move is still intact because I'll be looking at it based on the weekly trend because the weekly trend is still intact, right? So another way to be looking at this, guys, is let's say you did not get into the trade, okay? You did not get into the trend trade based on the weekly. Go ahead and turn that on. And price was sitting somewhere around here. Now you want to get into the trend because you're looking at these big moves all the way up to $1 and $1.20, but you're like, okay, I don't know whether I can be greedy enough and wait for this bid on the dynamic, okay? You missed the trade over here. You missed the trade over here. Now price is sitting over here. And you're like, okay, it would be ideal if price comes back down over there, but I don't know if it's going to do that. Is the market going to be generous enough? Often the market tends to be, in crypto, often the market does tend to be generous. But let's say you don't want to risk it, okay? Because there's a risk of missing a trend, right? Especially when you have conviction in the trend. So you have to find a different spot to buy. And looking at this neckline at that point would have been a good spot. So you look at the neckline and bid around 40.88 cents. And at that point, there's two things you can do. You can say, I'm playing this based on the pattern. I'm looking for this to hold. If it doesn't hold on the 4-day, you're looking at it on the 4-day. If it doesn't hold, I'm just going to get out, okay, and I'll look to reposition. Or you could say, I'm looking at the 4-day, yes, I'm deriving my horizontals from there, but I'm playing this on the weekly and I'm hunting for a higher low, right? So let's go ahead and do some drawings for you guys. If price does this as a trend trader, you're hunting for higher lows. You're trying to bid there, you're trying to bid, oops, didn't mean to do that. You're trying to bid there. But my drawing tool is being weird. Now, over here, when price comes down next, you don't know whether it's going to be a deep pullback or a shallower pullback. You could use some guidelines to hunt for the high low, but as a trend trader, you don't know where the high low is going to be. You could bid over there, but it could come down lower. And that's painful. But that's the cost of being a trend trader, right? You can't have it both ways. You either take the pain and sit in the red. I've had to sat in the red. Is that right English? I've sat in the red multiple times while price has gone down lower and then eventually does this, right? That's the cost of being a trend trader. So you could have bid over here is what I'm trying to say, at around 40 cents and then saw price come down lower and then you're like, hey, the trend is still intact, so I'm going to sit in it. But that needed to have been your trade setup before you started your trade. You can't change your rules after the fact, right? Which is why I keep it simple for you guys. I'm like, if you're trading it based on the 4-day pattern trade, get out of your trade, exit, and then reposition on a new weekly trade because you have that right in front of you, right? So that's what we have at the moment, the opportunity to, or rather we did have it up until this morning to rebid that. Always edifying. Hey, I'm glad I was able to help, Alina. Radix, I'm surprised you're talking about that one, man. If they still have the same CEO, I would say do not DCA into that coin. I take that back, man. I take that. I shouldn't be saying that live. But yeah. Alrighty guys, I hope you enjoyed the stream. Holy shit, it's been 48 minutes. What the hell? But we did know. Is 25K out of the books now? I wouldn't say that, man. No, as long as we're not cleared, dude, 25K is always in the books. You can't, I mean, dude, Stanton, have you been listening to anything I've been saying today? Like, the cloud is red. We could come up to 50K and still come down to 25K, man. Like 25K is in the books until as long as you're under 60K. Okay, let's just keep it simple. Yeah, nothing is ever off the books. Yeah, well said, Rajesh. Well said. All right. So with that, guys, do it the Mango way, do it the easy way, do it the stress-free way. Also, I've been noticing that a few of you guys have been asking, PMing me certain questions and asking whether or not the C program is geared towards people who are brand new, completely brand new to trading. And yes, the C program is. It assumes that you know nothing about trading whatsoever. That being said, if you guys would like a introductory, like a brand new, initiation kind of course to trading where we go over like really basic stuff, let me know, and I'd look into building content. Yeah, so Sean says seed is for people then who know zero, right? Yeah, Sean's like Sean came in with zero knowledge whatsoever, right? But I do understand that some people would like even a bridge kind of course. If you guys would be interested in something like that, let me know. Can cover topics that we don't usually talk about, assuming that you guys know the. Mark is like somehow that was funny. Okay. The option course is I have like I would say 6 sections of it. The thing is, man, it's just really difficult for me to commit to building the course because I don't want to build it out fully and then there not be enough, like interest. Yeah, that's the word, interest for it. So I'm just struggling to and again, yeah, if we do Krisha has asked me if we get pre-commitments, will I be more keen on building that? And if we do get enough pre-commitments, I would say honestly, even 10 people pre-committing would be enough for me. I don't even know whether we'll get 10 people. That's the issue. If we get 10 people pre-committing to even early bird prices, I'd be cool with doing that, building it out, because it needs to be worth my time, right? Okay, so with that, guys, I hope you guys enjoyed the course. Let me know any feedback whatsoever in regards to what kind of content you guys are looking for. Let me know in the comments down below. Ciao.